Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can get it there, and of course you can get it any time. As far as these markets, down day, right? Last night we talked about the fact that if it didn't pull back today, I wouldn't know what to think. I thought we were going to see that yesterday, but not to be. We got a nice big spike up yesterday, and it never came back. We ended up with a trend day instead of a a pop up and then a reversal. But today, they did exactly what I thought would happen yesterday, and that is they started up, they pushed up, they couldn't keep it up though. And once that became true, you saw this thing pull back down. So if I pull in here and maybe pull up the SPX, put it on 2 days, and we'll draw in about, say, 10 minutes. Here's the Wednesday marker. So you come in, you open up, you push up, right? And then you can't hold on, right? You eventually get a drop, and then it just kind of tails off the rest of the day. So from this perspective, it did what it should do, and that is that it should pull back. And it pulled back in a way that's interesting and we should talk about, and we'll get to that here in a minute. So the Dow was down 153, S&P's lost 14, 36 on the composite, 21. Basically 1 to 1.5%, except for the Russell, and this is wrong. My quote vendor is lying to me again. Russell was down about 1.4%, closes at 1096, but it was down about 1.4%. So the numbers there actually were 1.44% down. Let me see here, about what, 14 bucks or so, 15 bucks. Okay, so what else happened? Everything else went down, with the exception of what? And this is kind of important to realize. You got bonds going up, and what else you got? You got the dollar going up. So bonds, dollar up, everything else down. Okay, so commodities get beat down with the bonds and dollar oil, actually with the dollar going up, and the indexes sell off after a big 3-4 day spike higher. That's the quotes. Let's go to the actual charts. Now let's talk about what happened today. So if I pop in here on the S&P 500, what we got is over the highs. Now remember, we had a 4-day spike up off the lows, and he'd already traveled some ridiculous amount. We went from 820 up to today's high, 129, almost 130 points in 5 days. That's ridiculous. I mean, I don't know how else to say it. Okay, I mean, usually you can get that kind of move down, but you usually don't get it right back the way we did. But that's what it did. We talked about the idea that we're probably setting up some sort of a range trade. That range trade, the question then becomes, okay, what is the range? Well, the first part of the range I thought might end up being that retest regen zone, but that wasn't true. That didn't happen. So where is it now? Well, if we go back into the intersection of these bars, and then if we take and stretch this top back up now, oops, didn't want to do that. Let me try again. Let's grab this and then pull it up into there. I think you'll see that that's probably a reasonable place to think that this thing might trade, right? So you're basically at the top of the first breakdown bar, the bottom, which is kind of the intersection of the spike down, so the high of the low, and the breakdown up here. That range is big. And if I pull this over so I can see it, that's roughly 190. It's about 100 points. We're almost at the highs of it. And so it makes sense that you would get a reversal. Now, the type of reversal suggests that it's going to continue. and that is it's a 2-bar reversal. And what's a 2-bar reversal? Well, it goes over the top, back underneath, has lighter volume after an extended move. That's true here, and you're going to see that's true on each of the indexes. Dow Jones, same case. NASDAQ Composite, exact same case. NDX, same case. And finally, when we go to the Russell, the Russell's a little different. Russell's been different all year. I guess it would make sense that the Russell remains different. What did the Russell do? Well, the Russell, our friend, he goes into, trades into, and fails to get higher. That's a successful retest, regen lower. That means the Russell's going to try to regenerate down. Now, it's early. I mean, it's the first, you had 2 bars test in there. You got less volume. That's another key component here. Gives you more confidence, right? The volume's lighter compared to here. So you go into it after a big fast move up. And remember, we had an ABCD structure on the way up. Let's see what that number was. So the low here was 1040, about 50, almost 60. Onto this would make 1138, and we got to 1117. So we don't finish off the ABCD structure. We get a retest, regenerate lower, and we get it here, and we also get it, it should have pulled it up to about there, and we also get it on the weekly. Now, if it trades back underneath this area, right, that ABCD structure is going to have to be given up. The other key thing here on the Russell is the top of the high of the low volume, well, the high of the swing point low bar. It's going to print as a swing point low. The high of that low high volume bar, 1075. If you want to be bullish, you really don't want to see the weakest one get back into that bar. You really want to see it hold. So you want to see the Russell hold up in here somewhere, and then again try to regenerate higher one more time, right? So you come back to here and try to regenerate higher. Same price point it's trying to get to, except for it just has to do it twice. That's the Russell. And then if we go over and look at it on the weekly, that's the daily chart. If we look at it on the weekly, remember we were coming into a retest regen on the weekly. Now the weekly had all the swing point breaks, remember? So this one to me was a very important one. Can it get over this high? The top of that bar was, let's see, 1115. We got to 1117. We flip around, we close under it. The Russell so far is doing a retest and regenerating in a bearish way on both time frames. Now again, it's early. We'll have to see how it ends up, but so far that's the case, because remember, on the other side of the equation you had multiple sectors and all the other indexes say it's going to be a range trade. Our little friend the Russell says no, it's maybe not. Now I don't want to discount the Russell because the Russell has given me better signals all year long, so I'm not going to like just ignore it and say, oh, it's, it's a strange little beast that does its own thing. No, we have to pay attention to it, but this is expected. You would expect some sort of a pullback after a big run up, and the fact that it comes on 2-bar reversals just suggests that it's going to continue. Sectors, same case. If I go look at the sectors, remember 5 of them had done retest regens and broken over them and said, okay, we're not going to regenerate lower. We're going to go into some sort of range trade. Well, tonight, almost all of them are giving you 2-bar reversals or bearish retest regenerates on the ones that hadn't broken it. So we'll start with the IBB, over, under, extended move, 2-bar reversal. IYT, same case, 2-bar reversal, exact same setup. If we look at the SOX, this is one that had not gotten over the regen. This regenerate off of this bar. It was testing into it yesterday, test into it again today. Now it does have more volume, so we may just come right back up there, but it did fail to get higher today and is trying to regenerate lower. The XLE is so weak it doesn't even have anything set up other than the fact that it's so weak it just wants to trade back down. Oil got clobbered again today. If you look at the oil market, and we can use the USO as a proxy, coming right back at the lows. So oil is going to test again. XLF, 2-bar reversal. The XLI really doesn't do anything different today, just kind of weak. It had more volume as it tested higher. XLK was a retest regen off of this swing point low that regenerates lower, or is at least starting to. Now we had movement into the safety sectors today. Now this is another clue, and that is that money doesn't want to leave. It just wants to find a safer place for the retest lower. Right? So the money goes pushing, looking for something else. It pushes into consumer staples. It pushes into utilities. Utilities make new highs. XLV, 2-bar reversal. Same sort of scenario. And then the XLY actually does the bearish retest regenerate and tries to regenerate lower. So you can see right across the board on the sectors, yesterday we got kind of confirmations that probably is range trades. Today a lot of those came back in. Remember I said yesterday I'd like to see a couple bars. Well, I figured it was going to be hard to do because we're so extended already on the bounce. So, you know, the jury's still a little bit out on those range trades, but if you look at the indexes, right, they suggest that it's still going to be a range trade for the most part, because if I look at, you know, we'll pop back in here real quick. If I look at the NASDAQ composite, for example, you know, that retest regen is here. It gotten way over it. The top was 43.79. We closed back into it, or almost into it, 43.82. So you can see here you actually held the 2 bars. So, you know, it's not as clean cut as you'd like, but then again you have to realize you just came up a huge amount of points after coming down a huge amount of points. And so I think still at this point one has to kind of read this as a range trade starting to set up. And we'll know that as it comes back and we see it test into these big areas if we get down that far. Even to get there, I mean, just look at what you got to do. You got to trade back into the gap area, huge gap area, and then you got all this congestion down here as support too. And to come back that low would still be exactly what we were just talking about with a range trade. And you'd actually potentially set up an ABCD structure to take you back up towards the highs. So you can see how this can play out in a bullish way. So it's a little too early to write this off. You know, 2 months later, we may be looking at some sort of a range trade from here down to this area, or maybe even to the lows again. I do expect that we're going to see some sort of a range trade play out, you know, for some period of time here. I don't think it's going to just go away. And because it's so huge, it's going to trade up and down in that range. And, you know, I'm sure everybody's going to call it one way or the other. Well, both ways, right? People are going to be on both sides of this thing. And I think, you know, the better thing to do is, like last night, is to measure where it looks like it's going to turn and either play the fade or take some profits and try to buy it back lower in the range if you want to be on the long side. Remember, the trend is not negative, right, at this point. I mean, you know, if I'm looking back at something longer term, in this case I'm looking at a weekly chart, you know, this trend still is up. Yeah, we got some sideways action going now, but the overall trend's still up. And matter of fact, if we look at the monthly, you know, it's quite clear the trend is still up. Yeah, we've got some, you know, indigestion up here, but, I can't argue this thing anyway but up so far. If we come back down and we break this low and start breaking these lows, well, then that's a whole different story. But we're a long way away from that. So, let's not get too far ahead of ourselves. So that's the way the indexes look, and that's kind of the synopsis of where it looks like we're going tomorrow. Okay, so let's take a look at the world markets and see what they look like. We know that we had Europe trade down again today, some strength in Asia overnight. Let's pop over and just take a quick look at these and see what they look like. So the All Ordinaries doing their bounce, trying to come up to the retest regen zone there. India was actually holding up pretty well, still in a big range trade at the top. Brazil is trying to break down. Got volume. It's going to test that volume again probably tomorrow. France over in Europe bouncing. It's coming up to do the retest regen. So that low is 4109.31. Test into it today. 1.4 has more volume, but a lot less volume than these other bars. So this will be a test tomorrow. We're going to see if these guys try to regenerate lower. A FTSE can't even climb. FTSE's just still trying to get over the breakdown bar. If we look at the DAX, DAX is into the bar already and has decent volume coming into it. 101.97 is a little bit less. So that's also a retest regen that will play out overnight. Toronto, there was a lot of issues up in Toronto today. I think we sold off probably as a result of that with the Parliament and gunfire there. If we look back at China, so China finally got a little lift off the news last night. Now China has a lot of news tonight, and that will be a big piece of what happens. The PMI numbers come out tonight over there. If we look at Hong Kong also, so they're just building out ranges at the bottom. Taipei, which is chip country, finally getting a bounce. The Nikkei, remember, had done a takeaway of a takeaway, now a takeaway of that one. We speculated last night that would happen, and that is what happened. So all in all, I mean, I don't know that the world markets are much different than the way we left them before. And to go back to the idea of some sort of a range trade, or at least pulling back for now, that kind of the what we saw in the indexes kind of dovetails in with what we're seeing elsewhere. Remember, we had the test failure last night on the gold. It starts to pull back. We got the same sort of scenario that we had before, where the bonds are trying to push up a little bit, right? They had a big spike, so they're going to come back up and test in this bar probably. And then on the other side of it all, we've got the dollar starting to push up again, which of course is what we saw, this big move here that eventually gave the market heartburn. Now, I don't think the dollar is going to take off again yet. It's probably going to do some sort of a range trade like we talked about. But at the same time, the moving parts are kind of moving the same way again to suggest that we get more pullback in these markets. Okay, I want to take a viewer question here, and then I'm going to take a few minutes to look at a few earnings reports. The question here had to do with the Russell. I missed this question last night, so I want to tackle it tonight. It reads like this. Please discuss these questions. I believe the Russell weekly, so let's throw this on a weekly right quick, that measured a retest regen is October 14th bar, and that's this bar, and it is. And the top of that, guys, well, the range is 1076 to 1115. The daily bar that measured for a retest regen is the August 1 bar, so we flip back over to the daily and look at it. So the August 1 bar is this bar, and top of that, bottom of that, 1107, 1124. So that had already retested and regenerated once before. So in other words, when we broke here, and it looks like I've lost my, this is getting annoying. For some reason, the Russell keeps losing its symbols. Anyway, we broke lower on this bar, September 30th bar. And as we broke lower, right, we came back to retest barely right here on the October 3rd bar. And so now as we're generate lower, right, now we're coming back up to test again. And so the question is like, when you come back to test a retest regenerate zone, you know, the second time, you know, is it just like a resistance zone at that point, or is it instead still a retest regen? Well, you know, the retest regen was just kind of a special name in my third book that I gave this idea that when you break a swing point, either higher or lower, you know, the key thing you want to see, especially if it's a suspect breakout, the key thing you want to see is when it comes back, you know, do you get a case where it regenerates back in the direction of the break, which kind of confirms the notion that that suspect, quote unquote, suspect breakout was in fact real. So it was kind of a way of saying, okay, here's the way the market can tell us that even though we broke higher with less volume, because if you go back and look, so many people look at volume and say, okay, it didn't break out with good volume, therefore it's not a good trend, right? It's going to fail. Well, I've seen those things go for 6 months, you know, on a daily chart without failing. And I know you've seen them too. And so the question is like, okay, if that's the case, and if you really do have a breakout that refuses to come back in, then, you know, how do you explain that? And I think the way you explain it is you let the market explain it for you. And so when you come back to retest and regenerate, the market is telling you whether it did or it didn't, you know, actually, if was that, you know, was the demand sufficient and still is sufficient for that breakout. And I want to do another example of it today. Like, pop into another chart here is Apple. You know, Apple today was trying to do a breakout of what? This range that had formed here. And that range, if you do the numbers on it, you know, the top of it is, and it doesn't have to be just swing point highs, but usually they end up being swing point highs. This one didn't. But if you do the number on that big bar, 103.08, you know, what did it do today? It got to 103, actually 104.11, which was actually a test of the highs as well, and then pulled back. So you had this stayed over it, you know, it would have been a breakout across these swing point highs, and it may have actually broke this one. 102.94, we close at 102.99, so it actually did break this one. Volume there is 63, volume here 68, so it has more, but let's just assume it was a false breakout or lighter volume. You know, does that mean it's going to fail? Well, not necessarily. And if it moves higher, when it comes back, that would be the point where the market could tell us, are the buyers going to step up and buy this thing at these higher prices? Or is it going to come back into this range, come back underneath that swing point? If it does the latter, then it was a false breakout. And that's what the retest regen is all about, right? Tell me whether or not it's real. And you have a slightly higher probability, depending on what the time frame is and depending on what the instrument is, you know, whether it's a stock, a sector, or whatever. You have a slightly higher probability on a confirmed breakout where volume expands on the breakout than you do on a suspect one. But it's that retest regen that really tells you something, right? That's where you can find out for sure, independent of the volume in either case. So that's what the retest regen is all about. Okay, unfortunately, I think I've taken too much time here talking about this, but it was worth the digression. Talking about Apple, Apple was holding the market up all day today, falls back in, you know, really just doesn't do what it was trying to do. So it looks to me like it's still in the range. If that's true, this outperformance that we've seen recently with the NDX is probably going to pull back the other way, and we're going to see that outperformance become underperformance as a result, because this is such a huge part of the NDX. And we also saw that, just by the way here, we also saw that with Google today. You know, the big three is Google, Apple, and Microsoft. Google sells off on earnings, leaves a spike down there, gets a nice big push off as the rest of the market does, and now it's coming back into that bar. It's probably going to try to test the lows again. Microsoft has earnings coming up. Microsoft started to sell off a little bit today after its big move. I think that's a 2-bar on it as well. Yeah, it is. That was going to trade back down before earnings. So the big three don't look like they're going to carry this market higher right now, and Apple being the biggest one in there. Folks, thanks for joining me. I will see you tomorrow night. We'll do it again, and we'll see what we got. Have a great night, and again, take care. Good night, everybody.